Hello, everyone. Welcome to week 6 of Investment Team. This week, we'll be digging deeper into researching stocks. Specifically, we'll be talking about how to utilize company balance sheets and annual reports in order to support your analyses of different companies when you're buying stocks. First, we'll be looking into balance sheets. A balance sheet is a financial statement that lists a company's assets, liabilities, and shareholders' equity at a specific point in time. A balance sheet is divided into two parts based on the main formula assets equals liabilities plus shareholders' equity. This means that assets, or the resources owned by a company, are balanced by a company's financial obligations along with the equity investment brought into the company and its retained earnings. To become familiar with balance sheets, you must first know different types of assets. In the assets section of the balance sheet, accounts are listed from top to bottom in order of their liquidity, which is the ease in which they can be converted into cash. They are divided into current assets, which can be converted to cash in 1 year or less, and non-current or long-term assets, which cannot be. Depreciation is calculated and deducted from most of these assets in order to represent the loss in value of the asset over time. Current assets can be converted easily into cash. Cash is the most fundamental element of the current assets section, which also includes non-restricted bank accounts and checks. Cash equivalents are very safe assets that can be readily converted into cash. Accounts receivables consist of the short-term obligations that are owed to the company by its customers. And lastly, inventory represents the company's raw materials, work-in-progress goods, and finished goods. Depending on the company, the exact makeup of this inventory account will differ. Non-current assets are assets that are not turned into cash easily. They can refer to tangible assets such as machinery, computers, buildings, and land. Non-current assets can also be intangible assets, like patents or copyright. On the other side of the balance sheet are the liabilities. These are the financial obligations that a company owes to outside parties. Like assets, they can be both current and long-term. Current liabilities are the company's liabilities that will come due or must be paid within 1 year. This includes both shorter-term borrowings, like accounts payable, along with the current portion of the longer-term borrowing, such as the latest interest payment on a 10-year loan. Long-term liabilities are debts and other non-debt financial obligations, which are due after a period of at least 1 year from the date of the balance sheet. Shareholders' equity is the initial amount of money invested in a business. If at the end of the fiscal year, a company decides to reinvest its net earnings into the company after taxes, these retained earnings will be transferred from the income statement onto the balance sheet and into the shareholders' equity account. This account represents a company's total net worth. There are 4 important financial performance metrics. Liquidity is when you compare a company's current assets to its current liabilities in order to provide a picture of liquidity. Current assets should be greater than current liabilities so that the company can cover its short-term obligations. The current ratio and quick ratio are examples of liquidity financial metrics. The next important financial metric is leverage, which is when you look at how a company is financed because it indicates how much leverage that it has, which in turn indicates how much financial risk that the company is taking. Comparing debt to equity and debt to total capital are common ways of assessing leverage on the balance sheet. Another metric is efficiency. By using the income statement in connection with the balance sheet, it is possible to assess how efficiently a company uses its assets. For example, dividing revenue by the average total assets produces the asset turnover ratio to indicate how efficiently the company turns assets into revenue. Lastly is rates of return. The balance sheet can be used to evaluate how well a company generates returns. For example, dividing net income by shareholders' equity produces return on equity, and dividing net income by total assets produces return on assets. For the KWHS competition, the most useful part of the balance sheet analysis is how we can derive various financial ratios from the balance sheet. These financial ratios help investors get a sense of how healthy a company is. And some of the various financial ratios that can be derived from the balance sheet include working capital, current ratio, quick ratio, debt to equity ratio, and debt to total assets ratio. This is an example of what a balance sheet looks like. You can see the two sections first on the top here and next on the bottom here. So first here we have the assets, and then at the bottom here we have liabilities and equity. Next, we'll be talking about analyzing company reports. An annual report is a comprehensive report on a company's activities throughout the preceding year. It is used to attract investors as it allows for potential investors to understand the financial state of a company. Although there are various types of annual reports made by companies, we will specifically be focusing on Form 10-K, which is an annual report that is required by the United States Securities and Exchange Commission. The report begins with a detailed description of the business, followed by risk factors, a summary of any legal issues, and then the numbers. The most essential components include Item 1, which is business, which is a description of the company's operations. Item 1A, which includes any risk factors that the company is facing. Item 3, which includes any legal proceedings that the company is involved with. Item 6 includes any selected financial data that the company has to share, which includes things like the balance sheet, income statement, statement of cash flows, and the statement of shareholders. And lastly is Item 7, which is management's discussion and analysis of the financial condition. The most important sections for an investor to look at are items 1, 3, 6, and 7, which I just listed previously. Item 1 explains what the company does, who its customers are, and the primary industry in which it operates. Potential investors should also consider any risk factors associated with the company. One risk factor is legal proceedings that the company might be facing. The U.S. has regulations that require companies to report any litigation, especially if it affects income. Next, items 6 and 7 both involve and explain the financial data. The statements most companies will include are the ones that you see on the slides. So this is an example of Apple's annual report, which is just the table of contents section, because the entire Form 10-K is about like 100 pages. So here you can see that they have 4 overall parts, and at the top, you can see there's item 1, which is business. Here we have item 3, which is legal proceedings. Here we have the financial data, which is item 6 and 7. And then they have some other sections, which includes, like company leadership and other supplementary information. So the link to Apple's annual report is going to be in the description box. But you can also easily find other annual reports using Google for other companies. So this is an example of a business section from Apple's annual report. And as you can see, they start off with their company background, and then here they go into a little bit about their products. This isn't the entire item 1 of Apple's annual report. They also kind of talk about their services and other additional information about their market. So here's item 3 from Apple's annual report, and they just kind of talk about any legal proceedings that they go through, or if a company isn't going through any legal proceedings, they can just say here that they aren't going through any legal proceedings at all. Here's item 6. This is just the very first table that pops up when you start to read this section. And basically it's just talking about Apple's total net sales, their income, and other financial data. So this is the first section of item 7, which is the management's discussion and analysis of the financial condition. So this is kind of talking about the sales and operations for specific products and services that Apple offers. And that's it for this week's video. The link to the presentation slides are in the description box below. Thank you for listening.